Welcome back to Indian Open right here on BloombergQuint. After witnessing slow order bookings in the first half of this financial year, Sterlite Technologies just won a multi-year order worth 1,800 crores, split into two parts, but 1,800 crores from the Telangana government. Does this signal the right turning for the company and for orders of this nature coming for the industry? Let's ask Group CFO Anupam Jindal, who joins us right now on the show. Anupam, congratulations on this order win. Thanks so much for joining in. Must say, 2020 started off on the bang with you. Happy New Year. Can you give us some details about this order and what does this do to visibility in the near term?
Sure, it's a great order win for Sterlite beginning the current year. We have been working on this for quite some time, and this is giving an opportunity to us to serve the state of Telangana. It's a part of larger BharatNet project. Through this project, we'll be laying the network, high-speed broadband network for about 11 districts, serving 3,000 villages and 6 million of rural people. And this is second in row for us after Maharashtra, which we are doing quite well. We are doing that. And this is another project. So 1,800 crore total value of the project. First phase which we have received is 1,100 crore, which will be followed by another 700 crore order in next 1 year or so. The total timeline will be about 2 years. So most of the revenue will come in calendar 2020 and partly will go in 2021 as well. So these are the kind of things through which this will be another state-of-the-art network. The additional thing in this is that the government has asked us to connect even the rural homes also. So the fiber will be going right up to the small villages and small homes through this project. So that's a great new initiative taken by the government, and I'm sure other state governments who are thinking of the project may also look at this and do something similar.
Just on this order, the size of the order on a few brokerages say is larger than anticipated, and maybe the blended margins would be higher as well. Are both these assumptions correct?
So I think the order in total is about 1,800 crore. 1,100 crore has been received now. 700 will be after a year or so. In terms of margin, I think overall the business margin is about 14 to 15% for us, and this may vary project to project. For this project, we are looking at similar kind of margins.
Okay, so correct me if I'm wrong, Anupam, the margin guidance given by you for this financial year was somewhere about 20%. In the first half, you've been clocking margins of somewhere between 21 to 23%. Where do you plan to end the year, FY 21-20, in terms of margins? Do we see margins expanding from current levels, or it will be around the same?
So I think for the full year, we are looking at close to 20% kind of EBITDA margin, but we are looking at overall absolute EBITDA for next year, both revenue and EBITDA to grow up. And in terms of margin, since the mix of the business is moving towards integrated services offering, which we are giving, I think the margin could remain in the range of about 20-21% even going forward. But important thing for us to drive is absolute revenue and absolute EBITDA, followed up by a strong ROC, which we continue to maintain that we need to drive 25+% ROC growth. So that's the kind of three parameters we are looking at in terms of what the business we are driving.
Okay, and with this order that you won of 1,800 crore, this takes your order book total value to somewhere close to 10,000 crore. Are you looking at any more orders in the near term? Because in the first half of this financial year, booking was on the lower side. Can we see that momentum changing now?
Yes, of course. We are looking at many more deals to get finalized in next few quarters. We are working on these for quite some time. The conversion was really slow in last 6 to 9 months. So to that extent, you're right that H1 of the current year did not see much of conversion happening. But as the year is closing and as we are getting into the new financial year as well, 21, we will be seeing many such opportunities getting converted. We are in discussion with many such public opportunities as well as private opportunities in India. And we are also starting to work on external international opportunities on the integrated service offering side. We have done one acquisition in July, which was in September, which was in UK, IDS. That's a data center specialization company, and through that also we are looking at newer opportunities to come on hyperscale data centers. So these are the various things which we are doing, and we see many more opportunities to come going forward.
Anupam, this is something which we already know with regard to capex by telecom companies. Even the global telecom companies' capex has been declining, be it in China, Europe, or for that matter, India. Are you seeing any trends right now where there could be some bit of revival now going ahead? And also give us an outlook on fiber prices, how they've been trending.
Sure. So in terms of the overall capex, both by the telcos and the new category of hyperscale data centers and content companies who themselves are needing to have their fiber network, I think after a slow period of low capex, we are seeing some revival in the capital spent by both these categories. Telcos are starting to spend some money. OTTs are already having their plans. Data center, hyperscale data centers are already having their plans. But we'll see much of that getting converted in maybe next 6 to 9 months. Till then, we may still see some slowness. But as I said, that the overall long-term scope and long-term opportunities are quite big. Even on 5G, we are seeing many more countries and many more companies getting into trial mode and getting into implementation of the network. So I think next 6 to 9 months would be crucial for us to look at in terms of getting those opportunities converted for us.
Okay. The other bit that we would want to talk to Anupam about, one would be, two more conversations. One is what does the services business do, not just in the near term, but post FY21, because a lot of brokerages believe that business might just cool off a little bit. This order provides that little bit of comfort, but it would still cool off a little bit from the higher levels. And two, he just mentioned that a lot of companies and countries are getting into the 5G mode as well. It'd be interesting to know from Anupam, what's the predictability or / the certainty of the pipeline getting executed in the next 18 odd months from the governments? One, BharatNet and other orders from the central government, not on the 5G side, but otherwise. And then on the 5G side, India will certainly not be joining the bandwagon anytime soon. But what about some of the others? So two conversations, one on the macro, one on the micro. Anupam, first the macro, since you just spoke about how some countries and some companies are getting into 5G. A two-part question. The predictability of the pipeline that might come in for Sterlite Tech through governments, through the India government, Mahanet and other orders, 4G, etc., and the countries that you mentioned are getting into trial mode for 5G over the next 18 months. Is it predictable or is it not predictable as we speak?
I think the predictability is a very relative term. It depends what kind of percentage of predictability we are looking at. We are by and large very, very convinced of the opportunity for the company, both in terms of fiber and the new business vertical, which we started about 5 years back, of the integrated services offering. And this is coming to be a very positive thing for the company, where we are getting larger share of the capital spent both in India and outside India as we are marching into that territory. And in terms of predictability, the larger industry trend is showing that things are going to get much more intense in terms of demand for 5G and overall data networks. So these are the things. Maybe the timing wise, things may vary to some extent. For example, FY20 did not turn out to be as we had expected, in spite of having a very good order book, and we saw some clawback on those orders in the past. But I would say that largely things are going to be very positive, and we are actually working towards that. We are creating those opportunities by investing in technology and talent and deep customer engagement, which we continue to do over the last 4 years.
Okay. The other part is, what does all of this do to the services business, Anupam? I mean, this order is great. The belief and one note that speaks about that they anyways expect that the services business will cool off a little bit from FY21. Is it a dire prediction which might be false because you might be knowing better than almost anybody? Would the services business stay stable, or could it show signs of a decline post FY21?
No, I think services business has shown tremendous growth since we started from zero to almost like this year, we might be doing close to 3,000 crore against 1,800 crore we did last year. And we see that business continuously growing. There's no reason for us to think in terms of the pipeline of opportunities, the kind of customer expectations we are getting, the kind of customer engagement we are having, both from the public, private in India and also as well as outside India. I think the business is poised for growth, and this will be a major driving force. This business is repositioning the company to a larger extent in the minds of these large customers, and not just the telecom operators, but also the large-scale, hyperscale data center customers. And this is a great positioning for the company for a larger growth in next 4 to 5 years. So we really don't see that services business getting stagnated at some point of time.
Okay, Anupam, what about the product business, which has already been facing demand headwinds, and we've seen in the performance so far in the first quarter, be it the capacity utilization levels, or for that matter, even the realizations. And you've already guided, I guess, the profitability in the second half will be lower compared to first half. Are you still sticking to that, or there could be some green shoots?
Yes, so I think on the product side, after a great spell of 4-5 years of growth in terms of volume, price, profitability, and everything, we have seen FY20 coming as some bit of pause where demand did not grow at global level, and consequently affected us also both in terms of volume and price, and that is what we have guided. We see the market has, from fiber point of view, bottomed out, getting stabilized there. Both realizations are also quite stable now. And we see in next 6 to 9 months, things will move up. We see some green shoots happening. Not significant enough to talk about, but the direction is looking very positive.
Then would you believe that going ahead, growth prospects lie more on the services side of the business vis-a-vis the product?
I think as a company, if we talk about FY21 onwards, I would say that both services as well as products will continue to drive, as we have capacities already established up to 50 million of fiber, which is one of the largest globally. And as we see better utilization of that, on the top of that, we are also doing capex for capacity expansion of cable from 18 million to 33 million kilometer. And that will also drive the volume growth and drive the growth. Beyond that, we will see what further expansion or maybe product upgradation we need to do. Those are the things which will continue to be there. Services we talked about will continue to have major drive push. So in terms of the mix, difficult to say how it will pan out. Currently, we are emphasizing that it could be 50-50, but it could be around that. And both the businesses we see driving the growth of the company. Maybe by nature, the services business might see a larger growth, but we are currently hopeful that both the businesses will drive revenue as well as margin growth.
Okay, I just have one last question, Anupam, because you referred to it in part. Optic fiber prices. What is the current pricing scenario, and do you reckon that this could be the levels at which prices could sustain, or is there a chance of because a large global supplier might come in and put up some capacities or give up some supplies, that there could be a reduction as well?
I don't see that prices are going to go down from the current levels. The prices have got stabilized for 6 to 9 months in the past now, and they are at the current level. We are seeing some 5-6% improvement. As I said, not significant enough for us to talk about. Again, in some bits and pockets, we don't see any more capacities coming in because there is already whatever line of supplies were to come, they have come, and looking at the current demand scenario, we are not seeing or hearing any new plans for capacity expansion. Coupled with the erosion in the realization, I don't see any new business case will be made out for any new investor to get in, or any existing companies to get into this. So I think, as I said, that industry is going through that pain right now, which is maybe another 6 to 9 months away. But the long-term prospects of the industry are still quite positive for the existing players, particularly large players like us.
Well, we wish you all the best for that, Anupam. Congratulations on this order win again, and thanks so much for speaking to us at BloombergQuint.
Thank you.
Well, that's the view from Sterlite Tech. Optimistic about both pricing as well as business prospects. The stock marginally higher on a day when the markets have cooled off. So on a relative basis as well, Navneet, the stock is doing very well. But the markets, unfortunately, and banks in particular, Navneet, are not quite doing well.
Yeah, Neeraj. In fact, we've broken that support of 32,200, which most of the analysts have been highlighting on Bank Nifty, which is slipped below that mark now. 32,184 is where the banking index is trading. And of course, the key laggards there are Bank of Baroda, PNB, RBL Bank. And what's dragging the index lower are your heavyweights like HDFC Bank, which is down about 1%. Even the other heavyweight, I believe, SBI, Kotak Mahindra Bank, all of them have seen cuts of between 1% to 1.5%. But when everything's trending lower, you've got the volatility. Remember, it had already reached its support levels of 10.5 to 11 from thereabouts. Now look at India VIX, it's up 8%, and this is something we were mentioning, that at lower levels it had bottomed out. Now in run up to the budget you could see volatility increasing, and that's what we're seeing in today's session. India VIX is up about 12 to 12.5%. But some interesting stocks, Neeraj, which have moved higher. Reliance Industrial Infra, pull up that stock. It's gone up on good amount of volumes, and after a while, I guess, it's also hit its 52-week high. The stock's gained about nearly 17, not Reliance Infra, it's Reliance Industrial Infrastructure. If you could just pull up that stock. It's at 370, currently trades around that mark, 16 to 17% higher. Zuari Global, which we've been highlighting, the stock was locked in upper circuit yesterday and has gained once again today, seeing strong buying interest at every level. And even Jacob in the opening session. And retail, small mid-cap companies, when markets are trending lower, you're seeing some buying interest. Jacob is up about 10%.
Yeah, both of them tend to move in tandem, as we've seen in the past. But, well, with that, it's a wrap on this leg of Indian Open, at least from Navneet and myself. Thanks so much for watching. She'll be back with Agam for the FNO show in just moments from now. Stay tuned to BloombergQuint Live.